Morning, good evening, good afternoon. I'm Walt. And in this video, I'm going to discuss do's and don'ts when deciding how to spend tax refunds. Let's start with the do's. Pay off or pay down credit card balances that have monthly interest. Credit cards tend to have some of the highest interest rates. So the longer you carry over balances, the more money you lose. If you can use your tax refund to pay off this debt or pay it down, it will save you money. Credit cards are that debt that are the easiest to get into and sometimes the hardest to get out of. So if you can get your tax refund and take a portion of it or even all of it and pay off credit card debt, go ahead and do it because you're saving yourself more money in the long run. And if you can only use some of that money or to pay it down, make sure that once you pay it down, you're being intentional with a plan to put forth so that you can pay that balance off completely. Because the longer you carry over balances, the more money that the banks make and the more money that you lose.
All right, let's take a deeper look into just how much money you will actually be losing by carrying over credit card balances. Here we are looking at wallethub.com. They inform us that new credit card accounts will have an interest rate of 19.24% for 2019, and existing customers would be at 14.14%. Let's take a look at a real life example. If you currently have a $1,000 balance at 14.14% interest, you lose $141.40. The next month, you pay the minimum of $25. Then 14.14% interest will be added to that balance. In just 2 months, you will lose about $275 to interest. Just interest. Imagine what you could do with that $275 if you did not have to pay that to the banks.
Number two, pay off bills that are overdue. Creditors will send accounts to collections for non-payment on average after 6 months, but this may vary and can be much sooner. Once this overdue account is reported as in collections, your credit score will be impacted negatively. A credit score drops impacts financial plans, such as being approved for home loans. So using your refund to pay off or pay down overdue bills will prevent it from coming back to haunt you in the future. I read an article about 2 weeks ago. The article was talking about how 7 million Americans were 3 months behind on car payments. Now, that is an example of a bill that if it was to go to collections and get on your credit score will have a negative impact on future plans. You know, if you have a car right now, there is a great likelihood that you need it for work. You know, if you have kids going back and forth, transporting your kids to different activities. So that car being repossessed is going to put you in a bind. In a lot of instances, your family in a bind. So you're going to want to have access to another car and at some point go into a car dealership to purchase another car. With a car repossession on your credit report, being able to secure another loan is going to cost you more money on a down payment, and I can guarantee that it's going to be a higher interest rate. You know, probably more than you're willing to pay and maybe even more than you can afford. So if you can use your tax refund to catch up on a bill such as car payment, you just don't want that stuff to be on your credit score because when you go forth and plan for bigger expenses and you do require lending in those instances, such as obtaining a loan for a home, you're going to have to clean that up on your credit report anyway. So why not do it now instead of having to worry about it later? Final do that I'm going to discuss in this video is buying shares of stock from companies that historically pay out dividends. Purchasing shares from companies like Johnson & Johnson, who have historically and consistently provided dividend payouts at least 4 times a year, is a way to earn more money. Holding stock like these for 20 to 30 years will prove profitable, especially during your retirement years. Something I started to do in 2018 after reading the 25 Habits of Highly Successful Investors was doing my research into these dividend providing stocks. One of the things that upon my research showed that these companies had a history, when I say history, I'm talking about 20 years or more of providing dividends consistently for their shareholders. And not only that, you also want to look at how often they increase the percentage of dividends that they pay out to their shareholders. Important, because that is a way of being able to make your money work for you, getting paid off of your money. So, and you don't have to go and buy $20,000-$30,000 worth of shares. You can slowly but surely buy these shares. I mean, every tax season, you get a refund. You could say, I'm gonna take $200-$300. I'm gonna buy a couple of shares, and as time goes on, that'll add up. And when you get into your retirement years, you still have these stocks. This is revenue that you get every quarter that is going to supplement and hopefully, increase your way of life during your retirement years. So that's definitely something that I am doing.
The resources that you can use when doing any research on some dividend yielding stocks. This site right here, dividend.com, this is a great place to start. You go here, you type in the company that you want to do the research on. Right now I pulled in Johnson & Johnson, so it'll pull up the stock ticker. If you scroll down, so right here, it lets you know that for 56 straight years, if you move over to the question mark, dividend growth is the number of years in which annualized payouts have been consecutively increasing. So Johnson & Johnson has increased their dividends for 56 straight years. So that's something that you want to keep in mind when you're looking at stocks that you want to purchase that yield dividends. And then if you go down here, it lets you see right here, they got an upcoming dividend payouts shot clock, and it shows right now that tomorrow, February 25th, will be the next dividend payout that Johnson & Johnson shareholders can expect. And right over here, the next dividend amount, 90 cents per share. So definitely take a look at dividend.com and use this as one of your websites that you do your research on when you're looking to purchase dividend yielding stocks.
We went through the do's, some of the do's that I think, that you should do when thinking about how you want to spend your tax refund. Now I want to talk about 2 of the don'ts. The first don't start a savings account using a large sum of money from your refund. To be a successful saver, you have to be deliberate and consistent. Deliberate in what it is you're saving for, such as a retirement or a new home. Consistent in the way you go about funding that savings account. The money that you add to any savings initiative from a tax refund should increase it, not start the account. Final don't is don't put a large car payment on a vehicle that will render monthly car payments that will prove difficult for you to make. During tax season, associates at car dealerships will encourage you to put down more money in order to secure financing. However, you must identify beforehand how much of a monthly car payment you can afford, or you will be throwing away your tax refund. Say anyone that's interested in going and acquiring a new car and going the route of a car dealership, before you walk into that dealership, you have to establish two numbers. Number one, how much can you afford to make a car payment for? Assess your finances, assess your income, do all of those calculations to determine how much can you reasonably afford to spend monthly on a car payment. Now, not only should you factor in the car payment, you also have to factor in the car insurance, because even if you're trading in your current car, you must also know what that new full coverage insurance is going to cost you. It can cost you more than what you're currently paying. Be very, very conscientious of these things, because you don't want to get into a situation where, 6 months down the line, you're not having buyer's remorse because you no longer like the car. You're having buyer's remorse because it's hard for you to make the payments. This concludes this video. I hope that I was able to provide some insight. At the very least, I hope it got you to start thinking about how you might want to spend your tax refund if you haven't already, or future refunds down the line. Please like, share, comment, subscribe, and I look forward to talking to you in the next one. Talk to you soon.